right. Hey everyone, thanks so much for coming to this panel. So I'm Ernest O, co-founder and CPO of Kiln. We're super excited to kick off our second panel of the day, focused on real-world assets and tokenization. We have a star-studded panel for this topic today. So we have Paul-Adrien Hyppolite, the CEO and co-founder of Spiko. Justin Schmidt, who comes back following last year's amazing appearance at right here from Ondo. He's president and COO, and Guillaume Chatain, who's head of sales at Société Générale Forge. So maybe to kick things off, I'll ask each of you guys to give a quick intro on yourselves and what you're working on. Maybe you can start.
Hi, thank you very much for the invitation. So my name is Paul-Adrien. I'm the co-founder of Spiko. It's essentially a one-year-old startup based in France. What we are doing today is providing fund administration and fund distribution services on blockchain networks to asset managers, regulated asset managers. So we work with asset managers and depository banks in the EU for now to bring funds on chain. What we are building a bit more long-term is a global market infrastructure onto which, as an issuer or as a distributor of any kinds of financial instruments, you'll be connected and to tokenize these instruments and to distribute through APIs these same instruments.
Justin?
Yeah, I'm Justin. Glad to be back. Ondo is a tokenization company. Essentially, we really have two different pieces of our business. One of which is very akin to an asset manager, but in token form. So we create tokenized financial products. The other piece is really a technology business where we help build and develop various different DeFi protocols that actually interact with the tokens. We were founded a few years ago now. More recently, we've been focused on these tokenized cash equivalents. We don't use the word stablecoin. Generally, we call them stablecoin-like things. But we're around 280, 290 million in AUM now. Our most recent product we launched actually right after I was here last time. I was hoping to be able to announce it here, but we had some hiccups and we need to push it a week. But yeah, great to be back with you.
Hi everyone, Guillaume Chatain. I recently joined Société Générale Forge as their head of sales, coming from Coinbase, where I spent the last 3 years as head of institutional sales for EMEA and Asia Pacific. What SG Forge is doing is really we're one of the leaders in tokenization of securities, having started with tokenizing bonds, tokenizing structured products, because Société Générale in the real world is one of the leaders as well in creation and distribution of structured products. One cool thing that we did very recently was, as we are bringing all these securities on chain, you need a settlement layer. And we also decided to create our own settlement instruments for that, which is a stable coin that is completely fully backed by Société Générale in euro, called EuroCB.
Nice, awesome, thanks. So I thought we'd kick off by talking a bit about like tokenized treasuries, right? Because I think that's sort of like the main kind of real-world asset use case today, at least in terms of volume. And in the last year, there's been a lot of growth. So that I think there's over $1 billion now on-chain of tokenized treasuries. So maybe I was curious if someone, maybe Justin to start with, could expand a bit on who are the buyers of these types of assets. Why do they choose to do this on-chain? Maybe expand a bit into like how this fits into Ondo's like roadmap.
Yeah, absolutely. I think the narrative RWA goes all the way back to the original stablecoins, right? Tether is really an RWA of sorts, right? There's a dollar off-chain, and Tether represents it as a token on-chain. Back then, there was basically zero interest rate. So you weren't really earning any money on your dollars anyway. The interest was basically zero, and so people just sort of weren't that worried about it. Fast forward to 2023, 2024, interest rates around the world have gone up. Currently, USDY is paying 5.2%, I think is the current rate, to the token holders. And so meaningfully the economic thing shifted and people actually cared about getting yield, whereas before yield was so low it didn't really matter. I think the main use cases are really for us crypto native clients and crypto native people that are looking to already be comfortable with tokens and wallets and those types of things. We generally do not talk to a lot of traditional financial clients that are looking to buy T-bills in token form because they can just buy them in non-token form, and that just sort of works for them, right? So you sort of need to have some sort of use case for the token, and generally there's sort of two main mechanisms here, one of which is you're just like sort of crypto-native capital and you want to have things in token form. And then the latter is really a more advanced use case, but that's really using your capital and putting it to work within the financial machinery. So this is using your capital as collateral. So a lot of major traders, those types of entities that are holding on to lots of stablecoins, usually in the form of Tether at exchanges, or holding on to lots of stablecoins, usually in the form of USDC in DeFi. Anywhere where that makes sense, we think it makes sense to have a dollar that pays you yield instead of a dollar that doesn't. So I'll sort of stop there, but that's the basic gist. Yeah.
Makes a lot of sense. And maybe Paul-Adrien, so your company, you guys have been mostly in stealth, but I understand you're working specifically in this space of like the tokenizing treasuries. Maybe you can talk a bit about how you see your opportunity, the specific segments you're going after.
Yep. I think, as Justin said, I think now that short-term risk rates are high, it's kind of an obvious product to build. The market is 1 billion, as you said, as we speak, and kudos to Ondo for being a leader in this space. But it's still super small, right? It's probably, there are $6 trillion T-bills outstanding, so the current sort of tokenized T-bills market size is 0.01% of existing T-bills. So a lot of things to do in this space. I think we saw two phases building up over the last 2 years since 2022, where rates started to rise. And we're going to see a third one opening up on which we are working. First phase was like, okay, how sort of quick and dirty, which is usually the best business strategy. How do we put these products on chain? And we see like in 2022, beginning of 2023, a lot of startups entering the space, setting up SPVs, so unregulated entities, and buying existing T-bills funds off-chain to wrap them in token form. Now we are in the institutionalization phase, I think, with new tokenized private funds being launched. We saw, for instance, Ondo's OUSJ is one. We saw US TBs of superstates, and now the last one is BlackRock's BUIDL. And this is very important because these products are more regulated than the SPVs, and we now see asset managers entering the space and managing these assets, which is important both for giving credibility to public blockchains and comfort to the token holders. At Spiko, we think a third phase, is going to open up, which is a more mainstream phase, whereby we will have these funds not private only, but being registered with regulators, as you see in the US, IMF in France, for instance. And this is important because this will open up distribution and access to these products. Private funds, for instance, if you take BlackRock's BUIDL, there is a minimum 5 million investment amount to be an investor. Ondo's USD, I think, is 100K. The limits are a bit the same in the EU if we want to build similar products. So what we are working on is like more mainstream public offerings, like funds open to the public. And we do think it's important because there is a risk that only a few institutions, very large institutions, get access to the high-quality products like BUIDL, and otherwise, like the smaller institutions and the retail investors can only get wrapped versions of these instruments. And when it's done through SPVs, offshore, etc., you cannot properly measure the counterparty risk and all these things. So, I'll stop there, but I think that's the three phases we're going to see.
So we should stay tuned for some exciting announcements.
Hopefully, yes.
Nice. And maybe, Guillaume, if you can give us a bit your take on how at Forge you guys are approaching this specific asset class, and also maybe touch on the euro versus dollar, because there's I was pretty shocked to see there's still less than 1% of the stablecoin market is euro today. So maybe if you could give your view on why that is and how that might change.
Yeah, let me first, I completely agree with you. We're very early stage in the tokenization of securities. If you look at bonds in particular, 2022, 2023, there were something like 13 issuances for $720 million. Already this year, we are at more than 1 billion with seven issuances only. One of them was coming actually from Hong Kong, where we are 700 million for just one deal. SocGen was part of the good numbers last year, where we issued a green bond that was for $50 million that we sold directly to big insurers in France. And one of them actually bought the bond through the stablecoin that we issued. So buying directly, like with an on-chain instrument, which was pretty cool. On the structured product side, it is also very, very early. Structured products, for those who don't know, it's a combination of bonds and options and derivatives that you package together to basically tailor the risk return as your clients may want. When you start doing this on chain, you realize that the people who buy them have the existing processes in place, and you want to disrupt that by putting things on chain, making it more efficient. But the reality is you cannot just have all your bookings in one page or one set of systems, and then you have your booking on chain, and you have 1-2 products. Basically, what you want is to have everything combined, which means that you have to use the existing custodians. You need to use the existing processes to still put the blockchain product in the traditional world. Just this to say that there is a J-curve. Like in private equity, at the beginning you need to make investments, and you're not going to get the returns immediately. And we're just very deep in the middle of this J-curve, which is probably taking much longer than people expected when they started doing this business on chain. So this is going to grow, I think, super fast. The benefits of using blockchain technology in particular for the structured products is to do stuff wherever you issue a product and there's a fixed cost, you remove that fixed cost thanks to blockchain technology, which means you need to do stuff at very, very small scale and scale a lot. Very small, ticket size, but scale a lot. And right now we're still at the stage where we're doing few trades here and there just to prove that it is working. Not to talk about the stablecoin. Stablecoin, yes, it's shocking to see that 99% of the stablecoin market is in US dollar. The second currency is euro, and the third currency actually is the Turkish lira. Talking about the Turkish lira, you would not expect, why do you have a stablecoin for a currency that is not stable? But the truth is people are just actually using the stablecoin to get out of that currency. So it's a bit of an infrastructure arbitrage where they cannot do it with the Turkish lira directly in fiat, but they're using the stablecoin to then convert it into another stable and not have any exposure to the Turkish lira. For euro, it's quite different. I think the biggest issue is the big adopters of stablecoins have been in emerging markets. And by nature, people in emerging markets want to have access to a very strong currency, exposure to that strong currency, and this is why naturally they are doing stuff in US dollar. The second reason is people who deal in crypto and all the degens that are doing stuff in DeFi as well have just been used since the beginning of crypto to trade in USD. Even myself, I'm based here. I was based in London a few months ago, and everything when I speak crypto, I'm just thinking in USD. Maybe when I was doing NFTs, I was thinking in ETH, but this has gone to zero in my portfolio actually. But I think the market is mature enough so that people can start thinking in euro. There's going to be more and more investors in Europe who would feel that why do I convert my euro into USD into crypto, and on the way back is the same, and taking fees all along the way. So this is going to change, and I think especially with MiCA that is coming into force, is going to bring more clarity, and people will feel more comfortable having a stable in euro. So hopefully there's going to be a lot of people coming at the same time. That should be interesting.
Yeah. Well, we meet again in a year here, and we'll see what percentage we're at. Hopefully it's at least 5%.
I hope we get there.
Paul-Adrien, maybe I'm curious if you have anything to add on this topic on the European side, given you guys are a French company, and then we can shift to talking a little bit about next asset classes.
I can chime in as an American as well if you want, just to stir things up a little bit.
You want to start?
But you can go ahead.
A moderator's dream if you guys stir things up.
American comes to Paris and talks about your US dollar global dominance. Awkward. So I think you have to ask why. like who is going to use this and why. And so undoubtedly, the various different local fiat currencies in an on-chain world have no doubt have use, right? Especially when you're talking about like local payments or moving money, on and off ramp in those particular local areas. But I think if you look at where the actual stablecoins are already used right now, they're really used somewhat in a little bit of like local currency payments and stuff like that, but almost always within the actual financial machinery of like on-chain crypto activity, either USDT pairs on exchanges like Binance, so obviously you need to keep your dollars in Tether to trade in those pairs, or again, super generalizing, but USDC within DeFi. And it's not really clear that you get a lot of benefit by splintering all of that liquidity across different fiat pairs. Like you don't necessarily get a better trade into Bitcoin by having a Bitcoin, EuroC or whatever pair, or the same thing within DeFi liquidity. So I think you'll definitely have that like on-off ramping part. But if you're looking at like the core liquidity pieces of where these things are being traded, I would not necessarily expect any of that to change in the next 12 months.
Maybe just to add to this, I think when you look at the growth of stablecoins, it mostly happened in 2020, 2021, because it was adopted by crypto exchanges, and especially offshore crypto exchanges. Now that's, and they started with USD because the US dollar is the world's main currency. Now that we have MiCA and that stablecoins are a regulated product category, it's a good thing because, it can legitimate the space and the assets, but it's also a hurdle because you need to get regulatory approval and it's way more scrutinized in the EU. So managing, and I think you're playing a big role in this at Société Générale Forge, but it will probably be a bit more difficult for this market to grow given these regulatory barriers than the USD stablecoin at the time, which were mostly unregulated products and grew very fast thanks to that. So I do expect the euro share of stablecoin to grow in the long term, but short term it's a bit tricky. And we need players like Société Générale Forge who are working with global distributors of these assets to grow the size of the pie.
Makes sense. And I guess maybe as the types of use cases for stablecoins evolve as well, so if we start to finally have meaningful like payments happening like on-chain, for example, this may be another factor for like the euro or other currencies to appreciate. Maybe we can shift a bit to like what are the next like asset classes? So if we, in a year's time, so right now we have $1 billion of tokenized treasury. What's the next big category you guys think will go on chain in terms of assets? I think Ondo, on your side, you guys are working, among other things, on tokenizing equities. So maybe you can talk a bit about that choice and other categories you guys see in the market.
Yeah, I'll try to keep this brief because it's sort of a big topic, but we announced something we're calling Ondo Global Markets about, I guess it was a month ago. Time is confusing, but the general concept I think that we take from sort of first principles of figuring out what to bring on chain when is thinking about actual use cases and to sort of be like ruthlessly honest with oneself about, is this the right time? Because I think it's relatively easy to see a future, 10 years from now, 15 years from now, where all the world's assets are tokenized and they're all like interoperating in this interconnected blockchain world. That I think we all sort of agree with, and the time frame of like it's going to happen eventually is all sort of we agree with, and then the question becomes like, well, what do we do right now, right? So if you're a country, you have a different timeline. If you're a larger bank that's been around for a long time that has more time to think things through, you have a different timeline as well. And then if you're a startup where you have a runway of like a year or two before you sort of run out of money, you have to sort of like find product market fit right away. So our approach to that has been very much focusing on things that are large and liquid and already publicly traded, because it seems like those things obviously have tremendous use off-chain, and then try to bring them on-chain. And so we started with things like T-bills, which are really very stablecoin-like things. There was already clear product market fit for stablecoins, and like, hey, why not get a dollar that pays you yield, especially if you're using that money pretty interestingly within the ecosystem itself. So the next thing that we're looking at are other large publicly traded things that already have liquidity that likely will still have interest even within a significantly smaller economic environment, which is on-chain capital, right? The amount of capital that's on-chain versus off-chain is like an infinitesimal fraction, right? Like it's like, 1/100th or 1,000th or whatever it is. I can't do math right now because I'm a little bit jet lagged. But like the on-chain ecosystem is incredibly small, right? Like something around $1 trillion of assets versus, hundreds of trillions of assets in the real world, right? So inherently, you're bringing a product into just a much smaller ecosystem. So I think you have to be very, very careful about what you do there. So Ondo Global Markets is a pretty, I think, opinionated rethink of what a token on a public blockchain means. Things like public equities are called registered assets, at least in the United States. And in order for an asset to transfer from one entity to another, it's actually very, very complicated. And those things don't really mesh very well with public blockchains, which are really good at moving around these bearer permissionless assets. And so with Ondo Global Markets, we're looking at bringing these assets on-chain, but in a way that respects that registered aspect of the asset itself. And so the tokens themselves, rather than trying to directly represent a financial asset, are actually much more of a fractionalized API key, saying I have given, I've signed off on putting my token into, say, an AMM. I'm LPing with this capital, and in the event that it gets sold in that AMM, I see that that the broker dealer sees that as an event of actually selling that asset in the real world. So the broker dealers are basically like DeFi protocol knowledgeable. So in doing so, you're able to bring on-chain, again, not in like the normal tokenized fashion, but in a way bring all these assets on-chain to have them interact with and be collateral for various different DeFi protocols.
That's really cool. Makes a lot of sense. Guillaume, maybe you can touch on, because you mentioned earlier at Forge you have done issuances on different types of assets, like you mentioned a green bond, and what are the most exciting categories for you guys in this space?
It is, so I agree with what you just said at the end on the alternative side, and well, the use of the tokenized product as collateral. It's one of the best use cases, probably. The other reasons why you bring stuff on chain is, well, one, to bring efficiencies. All your cost of distributing a product, if you put it in traditional world or if you put it on chain should be much more efficient as you're getting enough scale to do that. Replacing central securities depository, replacing custodians, and a lot of intermediaries is going to be beneficial. And this is why I'm excited about structured products that will be put on chain and don't necessarily require a lot of throughput to make it very efficient, even with the infrastructure that we have today, especially with just layer 2s now. For the story, I created a startup like 2017 to bring structured products on chain myself. It was way too early. We did like a couple of these, but that was basically it. Now with the layer 2s, we can just like go like much cheaper and put a lot and really work at scale. The other place where it's interesting, and is not something that we're doing as SocGen Forge, so it's my personal view, is on the alternative side. A lot of these funds are not accessible to any regular normal being because you need like 20 million to invest. Using tokens and fractionalization and automation of how you distribute these products should make them available to a big majority of individuals in the future. And I think that's going to change a lot of things. So opening financial markets to the masses, I think it's an interesting place. And this also goes with the fact that you need to put these things, use them as collateral. Some of the products that would not be put on chain, you would have in your portfolio, you cannot borrow against them. If it's on chain, suddenly people can see it. There's a secondary market. You can borrow against it, use that money to put it somewhere else. And it's one of the reasons why I'm very positive about the future of blockchain technology. It's basically increasing the velocity of money. And we should all benefit from that.
Do you want to add something?
Yes, maybe just to push back a bit on the question, because I think we very much agree at Spiko with Ondo's approach of starting with simple and essential things like cash equivalents. And the size of the T-bills market, as we said, is very small. It's only 1 billion. The size of the stablecoin supply, the stablecoin market is 150x that. And in the grand scheme of things, stablecoins are also small at the scale of financial services. And we need, for tokenized T-bills, we need to, distribution has not been cracked yet, I think. And that's the reason why this market is so small compared to stablecoins, for instance. And we need to crack this problem. How do we distribute these assets? And it's more complex than stablecoins, at least at the time, because they are regulated products. They are securities. To distribute securities, you need licenses and all these things. And I think when it comes to cash equivalents like money market funds, as Justin said, at the US, it's very easy when you are in TradFi to access these products. It's not totally the same thing in Europe. And when you look at the US money market size in terms of assets under management, it's 3 or 4x the equivalent in Europe. There are a lot of things to do in terms of giving better access to these products to the European investor base beyond the crypto-only, the Web3-only space. So cracking this distribution rails is important, and tokenization is quite powerful because you can disintermediate banks when it comes to opening securities accounts. When you can just create by API a wallet and have your money market fund shares in the wallet in token form, it's really powerful as a tool to distribute these products because you don't need to open a securities account for each investor and partner with a bank. So that's something that is very interesting and that is permitted, at least in French law, and in other jurisdictions of the EU. So we are quite bullish on that, and we'd like to focus our attention on this before we move to other asset classes.
That's super exciting. Finally, I have somewhere to put my euro savings.
Hopefully.
Cool. And maybe like a last question to wrap things up. Maybe if we step out a bit of this space of real-world assets, can you guys share either something that worries you in general in the industry or something you're excited about? You can pick either the positive or negative thing. And this can be, ideally like outside of what we just talked about.
There are goods. Like I think the ecosystem is in a much better place today than it was like a year ago. There's been a lot of cleaning. A lot of the grifters are out. Probably I still have some, but hopefully we don't discover that for too long. No, they're not here. And that's my personal view, by the way, and not SocGen view. So I think we're in a much better place. But there are still some issues, like some regulators are ruling by enforcement, especially in the US. Hopefully this changes. And there are still like a little bit of bad, but like I think over time it's gonna clean. Like I think when Genesis issues are gone already, like there was good news with Gemini for their clients. We're in a much better position.
Nice.
I can go ahead. In terms of bad things, I'd say the space is still too nerdy, too crypto-centric. And just the example of the words we use is a good illustration. We are talking about RWA, tokenized T-bills. I mean, nobody outside of the crypto space understands the things. So I'd like to see in the coming years more sort of real-world use cases and the technology being brought to the masses. And in terms of good things, and I think it's kind of related to the previous points, we are now seeing like the big guns entering the space, Fidelity, Franklin Templeton, BlackRock in the US, and that's super good news. We are not at the same stage in Europe. Here, asset managers are more conservative. They are less tech-savvy, more risk-averse. But I think the US institutions entering this space will put pressure on EUs to step up their game, and that's a very positive thing.
Well, Mika should help. Sorry, I'm interjecting, but Mika should help there with Europe. It's a very good thing, like having some transparency, having some rules, being very clear. And not everybody is going to be able to comply with these rules. That should like reshuffle a little bit the space in Europe, but I think it should attract like institutional investors here as well as corporates. So that should be positive long term.
Nice.
Yeah, I'm very positive in general. Like, are there negative things about the ecosystem that will be fixed in the long run or will be slowly weeded out? Sure. But there's tremendous improvement even in the past 6 months on so many different fundamental infrastructure type things going on. It's very quickly becoming a sort of multi-chain world with smart contracts on different chains. There's been an emergence of sort of alternative Ethereums out there. The Solanas, the Sui's, the Aptoses, where there's tremendous activity picking up. The charts actually look pretty interesting for various different reasons. There's incentives there and stuff like that. But certainly there's been real development of really key, interesting engineering problems being solved. The bridging is getting so much better than it used to be. Things like Layer 0, Axelar, Wormhole, of course. So much better, so much easier to use. The sort of complete graph of I need to move my money from this chain to grab some ARB opportunity that I'm looking at in, say, Jupiter on Solana. Like that user experience, to agree with you 100%, is still not remotely where it needs to be, but it's still so much better than it was even 12 months ago. And I very much see this infrastructure continue to be built better. Things like custody are getting better. More and more liquidity is coming on chain. So I'm very, very positive, especially as we zoom out for the longer run, that this is the right platform for people to be building on.
And the pace of innovation is also
crazy.
The thing that I found amazing.
Yeah.
And I guess it's directly related to the fact that it's a permissionless system, so you can have like everyone come and contribute their innovation to the whole industry. Cool. So I think this wraps it up. To stay on time, I think we won't have time for questions on this one. So give it up for our panelists. Thanks so much.